Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Today is August the 11th. Lots happening in the markets today. So let's get into what changed. All right, we got canola up a dollar or $11.40 today at 6.8080. This was largely predicated on the gains in soybeans. I'll get to that in a moment. Minneapolis wheat was down 1.5 cents today at 5.95 and three quarters. Kansas was up three quarters of a cent at 5.19. Chicago wheat was up half a cent at 5.15. Soybeans, again, the big story of the day, up 23 and three quarter at 10.11 and a quarter. Soybean oil followed suit, up almost half a cent to 53 cents. Corn was up two and a quarter today, 3.85. The Canadian dollar was down 12 points at 72.58. Live and feeder cattle basically unchanged on the day. They closed at 226.10 in the live pit and 340.22 in the feeder pit. All right, let's talk about soybeans here. I'm going to talk about the reason first, and then I'll talk about what I think this looks like from a technical standpoint. So the reason we saw some gains today, I'm sure this is old news by now, but U.S. President Donald Trump on Truth Social or the his own social media platform posted that China is worried about its shortage of soybeans. I'll paraphrase here a little bit. I hope China will quickly quadruple its soybean orders, and this will be, a help to the China trade deficit. Thank you, President Xi. So he's giving a thanks to the president. Sounds like talks are going well, or at least through the eyes of the U.S. administration. So maybe, and generally, as we've been saying here on the channel, generally speaking, when there is trade deals done with China, particularly back in 2018, it did include some agriculture components to it. So this isn't a surprise that there is some agriculture components in the talks. And we knew that this would probably be a positive to the soybean market. So that's what's happening is we got a big uptick today, almost 2 bits of gains in the soybean pit. I'm going to go back here a second and just kind of talk about some of the technicals here. We did see beans rally above the 20-day moving average. It did rally briefly above this kind of low. I don't even know why I still had this line on the chart. Maybe just because there's some consolidative moves and kind of a triple test back here through the spring. It might not mean a whole lot, but I think what does mean something is this trend line here. It did not break the trend line, but it did close and trade above the 20-day moving average. I think of that as a positive. But I do kind of want to put a caveat on this as well, because tomorrow is the USDA report. Both WASDE and crop production are being released on the same at the same time, which they always are. But we did put our expectations for the WASDE and the crop production results in our weekly report that we sent out to our premium subscribers on Friday. So some stuff we reserve for our premium subscribers only. If you want to become a premium subscriber, hit up CanadianAgMarkets.com/subscribe, and you can get subscribed for only $99 a month. It's less than $1,200 a year. All right. So this was 2.4% gains on the day today. Really good performance. It helped pull a lot of things up. One of those things that got pulled up today was canola. That was up about 1.7% or $11.40. As you can see, that doesn't change a whole lot of the trajectory, although it does look like there is a bit of a base of support forming here. And, so that's something we should watch. I think if it tends to, if we could stay above this level, particularly if we can rally back over this 20-day moving average, it's getting very close to this trend line as well. So both of those things might happen at the same time if we are going to get that. So that's something that we will be watching, is just the test of if it's going to get there, and if a possible move above this resistance level or this trend line would be good, would be a good signal. It wouldn't be necessarily a full-on bullish signal yet. We are still in the throes of seasonal weakness, and the path of least resistance still does look lower at this point. But hey, you never know when things are going to change, and that's why we continue to look at technical signals for some of the signs that is going to happen. Some other notable commodities here that were affected by the news today. This is soybean meal. Now, if China has a soybean proper supply shortage, that means generally that the soybean meal market is at risk. China primarily crushes beans for meal, for animal feed. So we saw the meal market rally pretty nicely today as well. It kind of got up to that 50-day moving average. It has been trading over the 20-day for quite some time. Here's palm oil as well. So this candle here, we already started the August 12th trading day in Asia. But this big candle here is from the 11th. So that would have been prior. It would have included the news from President Trump, as that was released, I think, about 10 o'clock. I don't know if that was Eastern or Central time, but it was released last night late. So the Malaysian time frame session would have been able to absorb that news, and it looks like there was some on the vegetable oil front as well. Not sure why that didn't necessarily leak into soybean oil as much. Maybe there is some other underlying fundamentals around Malaysian palm oil that I didn't see cross the tape at this point. But good performance in palm oil, that generally is a good thing for the vegetable oil complex as a whole, although we didn't necessarily see it play out in soybean oil. And I believe that the canola strength today was largely based on the soybean strength. Just to kind of put another chart up here, I don't think I've ever showed this on the channel here before, but this is Dalian Commodity Exchange, which is the Chinese commodity exchange. That's number 2 soybeans. This is the one that they mostly crush for feed. It's the most liquid and used contract on the Dalian exchange. There's a number 1 grade as well. But as you can see, we're kind of getting close to some of these previous highs in this market. That does signal that there is some fundamental I don't know if concerns are the right thing to do it, but tightness, I guess, in the soybean market in China. So that's a good sign to kind of back up Trump's claim there about the supply situation in China. All right, let's move to wheat here a little bit. We did see wheat rally into the end of the week last week, but it opened high and closed lower than the open. We didn't really see any kind of major reversal today. We did kind of see 2 tests of that 20-day moving average, however, but we're still not back above this support that was broken just recently here in the middle of July. That support that was put in the middle of May. So those are 2 things that we're watching for, is a move above the 20-day moving average, although that in and of itself at this point isn't going to necessarily signal anything terribly bullish just yet. I would like to see it make a move back above this support that was broken around around the 605 area. So just to keep that in mind with spring wheat. Now, I don't know how much I trust that spring wheat contract. As we've been saying, the volume has been diminishing since moving to the MIAX, and the options quotes on that are almost non-existent. So it's a concern for Canadian farmers. I think that exchange is not performing as it did when it moved from the MGEX to the MIAX. So unfortunate, but if we want to use September Kansas wheat as a proxy, it's kind of doing some of the same things. It hasn't kind of moved above that 20-day moving average. And as you can see, it's kind of been hugging that 20-day moving average quite consistently over the last little while. And that continues to trade lower as a general rule as well. All right, just remind you again, if you haven't subscribed to our Premium Insights, we do put more information and more work into that. We put all of our opinions, some strategies. We talk about pre-report information and things like that into those reports. You can subscribe to that for just $99 a month. Go to CanadianAgMarkets.com/subscribe to get up to date on that. All right, here's some canola fundamental information. Now I'm going to put my neck out there, and I'll probably be the first or earliest analyst in Canada to put out an ending stocks number based on all the CGC data at this point. I'm using a 1.828 million ton ending stocks number for 2024-25. As you can see, that's pretty tight compared to last year, about the same, a little bit less than to 2022-23 year. Not quite as tight as the 2021 year, which was a drought, but still relatively tight, which we have seen play out in the markets this year as futures rose to $750 during this, late spring, early summer months. So we have seen some of this fundamentals play out, and I'll just kind of give you an idea as to why I came up with that number. Here's the cumulative canola producer deliveries to into the end of week 52. So that is completing the 2024 crop year. So the next set of data that gets released will be the first week of 2025 crop year. Producers delivered 19.7 million tons of canola into the commercial or into the licensed system. The CGC tracks only licensed deliveries and exports, etc. But what we like to do here is we like to kind of showcase what that looks like from an ending stocks perspective. Now, the Statistics Canada did update their March 31 stocks quite considerably at one point this spring, moving it to 6.4 million tons. I can't remember what the old number was, 3.8 maybe or something like that. I should have looked that up. But so the official Statistics Canada number as of March 31st was 6.4 million tons. Producers have delivered about 5.8 million into licensed facilities since then, which means there's about 611,000 tons available in farm bins if you use that data, right? The Statistics Canada March 31st numbers and the the deliveries since then, and just subtracted those as the weeks went on. So 611,000 tons in farm bins. Here's what that looks like from a commercial ending stocks position. We think that there's 1.2 million tons left in commercial stocks, which the CGC numbers are always a little bit light of the actual. So we did some calculations to account for those types of things. But according to the CGC, there's 578,000 tons in primary elevators, about 198 in crush plants or process elevators, and about 366,000 tons in export terminals such as Vancouver or Thunder Bay or things like that. So that's where we stand. So call it 1.2 in commercial, 600,000 in farm bins. That's where we get our 1.8 at this point. So that's where we're at. Thank you for watching. That's all we have for you today. We do hope that you tune in. Tomorrow. Our video tomorrow might be a little bit later, but we will get some of our USDA information in there. We do put a lot more emphasis on what we put into our premium subscriber content. So if you want to see a little bit more detail or a lot more detail, make sure you subscribe at canadianagmarkets.com/subscribe. Have a great day.